Audio.
MSG, that's the world's greatest arena. I've never.
Boom, folks. Welcome
MSG,
to.
that's the world's greatest arena.
Welcome to. I'm so not used to looking at myself on YouTube, folks. Welcome to Southern Night Kicks Live. We have a lot to go over. Lots breaking on the crypto front. I'm so not used to looking at myself. The only reason why I have this screen up here right now is Southern Night Kicks Live. We have a lot to go over. Lots breaking on the crypto front. I'm so not used to looking at myself. The only reason why I have this screen up here right now is Southern Night Kicks Live. And we have a lot to go over. Lots breaking on the crypto front. I'm so not used to looking at myself. The only reason why I have this screen up here right now. We have a lot to go over. Lots breaking on the crypto change players. I have a lot to go over right now. We have a lot to go over. Lots breaking on the crypto change players. I have a lot to go over right now. We have a lot to go over. Lots breaking on the crypto change players. I have a lot to go over right now. We have a lot to go over. Lots breaking on the change players. I have a lot to go over right now. We have a lot to go over. Lots breaking on the change players. I have a lot to go over right now. We have a lot to go over. Lots breaking on the change players. I have a lot to go over right now. We have a lot to go over. Lots breaking on the change Audio check. How we doing now? Yoga Mac, can you hear me? God damn it. What the frig? Oh, you can hear me now. Talon. Good to go. Awesome. Sorry about that. Really sorry when that happens. We have a poll going. Hey, Trish. Uh, Totally thrown for a loop here. So we have a poll going. Where do you think that Ethereum is going? We're going to be talking about why Ethereum, why Bitcoin, why crypto is not the stock market. We're going to talk about historically how is Thanksgiving Day week in terms of stock market performance. We're going to talk about where I think the markets are going to go through the end of the year, pretty much where I've been saying unchanged for the most part, with a bias to the upside. And what else? We're going to talk about 2023 and why I'm a lot more concerned about 2023. So let's go to comments. Let's say hello to people. Yoga Mac. Hello, sir. Sorry about the audio difficulties. Awesome. Falcon, hello. All right. So we do have audio. Good. Thank you, Talon. And McNeil, thank you. Thank you, Yoga Mac. Dane, thank you. Trader Isaac, hello, sir. TF Hatter, hello. Bonnie Bean, long time. Haven't seen you in a while. Hope all is well. Tim. Hey, Tim, thank you. Franklin, I have you. Thank you very much, Franklin. And there's Pete. Hello, Pete. Yes, please hit the like button, subscribe, take the poll. Don't forget to take the poll. And I believe I saw Trish here. Something happened to her comment. Oh, I refreshed. I deleted it. Trish, I know you're out there. Hello. All right, let's get to it. Let's talk about futures action. And we're going to go to a chart of Ethereum first. We're going to go over first off, let's take a look at what's going on over at Ethereum. Ethereum is cratering at current. The reason why it's cratering is that there was a hack last week over at FTX. Their creditors. Where's the article? Here we go. FTX hacker finally starts dumping huge amount of Ethereum. Over 600 million worth of crypto funds has led to scarcity in circulation. The FTX hacker has exploited millions of dollars of Ethereum from FTX to the drainer account and is slowly liquidating all the holdings. I find this fascinating. Holdings to create a significant dump for Ethereum's price. 80,000 Ethereum gets liquidated by FTX hacker. He's the 35th largest Ethereum whale holder. The exploiter has now taken the responsibility to create a massive price dump in Ethereum by slowly selling off ETH holdings. It is reported the hacker sold 300 million worth of Ethereum, and the decision to liquidate all funds may lead to a massive crash in the crypto market. He's also been swapping out Ethereum for, I guess this is a type of Bitcoin. I'm not familiar with all these symbols. I know this is Bitcoin. So he's swapping out for different cryptos as well. And this is what the federal government hates. They hate this. They want to know who you are. So let's take a look at Ethereum's share price. We're definitely going lower here. And there's going to be a crisis of confidence. Let's take a look at the futures action. This is not reflecting the current price, is it? 132, 09. This is off of Euronext. 1132. No, this is not reflective of the price action. Let's go take a look at Bitcoin. Bitcoin down in sympathy, down 2.63%. So I'm going to continue dollar cost averaging it on Bitcoin. And I'm going to go over a chart of Ethereum in a moment. We're going to talk about where I believe that it's going to bottom out. Don't forget to take the poll. Give me your thoughts about where you think that Ethereum is going to bottom out. And hello, welcome. Okay, so expect lower lows here. I'm not going to pause on my automated purchase of Bitcoin. Just going to continue to dollar cost average. Same deal. Let's take a look at the equity markets. S&Ps, they gapped up. They were higher. Oh, this is actually the Nasdaq. Nasdaq was up higher. This is a 15-minute chart. They were up higher. Nice gap up. S&Ps. Try that again, Bob. Try that again, Bob. S&Ps, same deal here. A gap up, but we have a bit of a fade on the session. Now we're flat. Let's keep it going. Do we have the Russell up here? Or as the traders say, rut? Wrong chart, Bob. All right, the rut is up slightly as well, but again, a gap up, but we're fading a bit, which is fine. They could be just filling the gap on the open. But what we want to see here is a higher high. Yeah. So what we want to do is take a look at the drivers of equities. I think we're moving up higher. Just want to set a notification. Now, what I meant earlier about what's the driver of equities, we want to take a look at the 10-year yield. And this is a problem. The 10-year yield is bidding right now. It's higher. Thinkorswim did an update over the weekend, and it threw off all my settings. Now, you remember that last week on the 10-year yield, we spoke about this on Thursday Night Stock Charts Live, that the 10-year yield was down on the week, but however, there was one trading day left to go. But on Friday, that one trading day really saw a sell-off on bonds, and yields moved up higher to ultimately close up on the week. Now, we're looking for a continuation move up higher on bond yields. If that happens, it's going to make it very difficult for the NASDAQ in particular to continue up higher. As long as we stay below a 4 handle on the 10-year yield, we could be okay. The S&P should be able to go up higher. In particular, the banks should be able to go up higher. The high-tech names, the big caps, maybe. Your money-losing stocks, your ARK fund stocks, not so much. They're going to be in trouble. So NASDAQ, this is flashing a red candlestick now because we're filling the gap, and that's what I think was happening right now. The dollar, for its part, the dollar is down on the session, and the VIX is like a coiled spring. If anybody remembers on Thinkorswim how to get rid of these things, somebody told me a long time ago. I have to go to YouTube for help. I forgot. It's been like over a year since I did it. $15-minute chart. We saw a fade on the VIX into the close, but keep in mind, Friday was VIX options expiration. Let's take a closer big picture look. US dollar. Good. Dollar took it on the chin in the after hours on Friday. Let's take a look at the euro. This is a 5-minute chart. Let's pull back here. Euro flat. Japanese yen bidding. So a lot of wonkiness in currency markets, not much happening here. I suspect we're not going to see a lot happen in currency land, in equity land. It's just going to be a quiet week. Let's take a look at precious metals. Even with the dollar lower on the session, gold is not bidding. It's holding 1750. That's what we want to see. Silver, it's getting bid. Basically flat, though. Not much happening here. Very quiet. Again, a quick peek at the VIX. Coming off that downtrend line. The VIX broke daily and weekly support last. We're going to go to a macro view of the VIX in a short while. Wow. Nat gas down over a 0.5 percentage point. Not loving that. Let's take a look at commodities. For ag, we want to take a look using a weekly chart, because the last time I looked at these was last week. Wheat, we knew it was going to have a rough week. It did have a rough week. We're at support. Corn, that bid was up last week off the lower band of support. This may move up higher. Higher lows. I skipped over light sweet crude. Light sweet crude broke down last week. You take a look at a weekly chart of light sweet crude. It broke support. Energy stocks, which we predicted were topping out, they broke down last week. So I think you're going to see more weakness there. And that's all technically good, because that is deflationary or disinflationary. Good stuff. Let's get real with this. Not a hacker, but a pawn. Big picture. Yeah, there's a lot coming out. The SPF character, they believe that there's somebody much bigger behind this hack. I think his last name is Friedman, out of, I want to say, Washington State, but he's been involved with. I don't know anything. I just hearing this. I have no evidence, so I don't want to get sued. But he's been charged with fraud in the past as well. Westerlaw, hey, how you doing, buddy? Go to show grid action, second square. Go to show grid action. Show grid. Here. Show grid action. Second square from right corner. Okay, I think this is it. Customized grid. You're the man. Westerlaw, thank you. Thank you very much. TZ Burton. Hello, sir. Jody, the lovely Jody. Very punctual this week, Jody. Thank you for being here. And Kurt's Video Vault. Deliveries of kerosene the other day. Yeah, I know the prices have really skyrocketed on kerosene. Okay. So it's gonna be a quiet week. Let's talk about historically what happens. Ethereum continuing to decline here. Before we go on to the price action for this coming week, let's talk a little bit more about Ethereum. All right, and this goes for Bitcoin, whatever cryptocurrency you like. I think that when you look at something like this, there's a lot of fear in the streets, and as a contrarian, I look at this and I say, this is why you keep cash reserves. This is why you have net liquidity, because Raoul Paul is an all-in guy on cryptocurrency. I always thought he was wrong. I think it's kind of crazy. What's his name over at MicroStrategy? Michael Saylor, all in. He leveraged up his company on cryptocurrency. These guys are intelligent guys, but while I disagree with them for being overly optimistic in this new frontier, which isn't even regulated yet, and it will be, uh, I have to say that while we see blood in the streets, that we have to step up to the plate and say, okay, what's our game plan here? Because if you were to take a look at oil, this is what I referenced earlier. Oil crashed back here in April of 2020. You couldn't give oil away. A futures contract, I think it was the April futures contract, actually went negative. You couldn't give oil away. So now look at it, and I'll illustrate the power of this chart, because as a technician, I looked at the trend, right? And here was the trend. We were in a downtrend channel, right? A multi-year downtrend channel, almost a decade of a downtrend channel. What did this sell-off do? It cleared the decks. It wiped out everybody. Every weak hand out there capitulated. They got out. And what happened subsequent to this sell-off was that you had a breakout of a multi-year downtrend channel. And we have now broken out to the upside, much to the chagrin of the consumer. But it just goes to show you that this is an opportunity for Ethereum, for Bitcoin. You just need to have the capital reserves, and don't assume that tomorrow is the best price you're going to get, because I don't think that it is. And I'm going to take a look at where the current poll is. I'm going to close the poll out in uh, 30 seconds. 30 seconds. Take the poll if you're watching this on YouTube. And I'm going to go where I think that we are headed on. I'm going to bring up the live stream. We have the preponderance of the people, only 16 votes? Really? Wow. All right, I'm going to close this out. Uh, believe that we're going sub 500 on Ethereum. Poll closed. All right, where do I think it's going to go next? Here's Ethereum monthly chart. Now, we only have a few trading days left to go in the month, but as you can see that we are clearly, this is real time. Oh, come on. We're down 27.5% on the month. this is a serious break. We may, if we do close down below this lower band of support this month, may rally back in an effort to try to recapture it. Do not chase that rally. It's a sucker's rally. Wait for it to make new lower lows. It'll probably test and try to get defended at 883. I think that breaks, and we're coming down here to a let's call it 557 on Ethereum. That's our price target. When does it get there? Not quite sure, but it's going lower, and that's our initial price target. So we predicted that we're probably going to lose another 50% from here on Ethereum. Then that's going to be your time to pounce. If you're dollar cost averaging in, stay with the plan. You may want to take a little bit extra cash, put it on the sidelines, and once you hit that support level, in and around that range, then take that extra cash, put it to work down at the tight support level, which we found. This is rock solid support. It was a breakout point in November 2020. We pulled back, we retested it. The low was 530. That's a great price target, 530. It was a breakout point here. We retested it in February of 2018. It failed to hold. We went into the crypto winter that ensued after that. Wait for the support level to get tested. Watch for a couple of weeks of trade above that mark. If we close there on week 3, then you want to look to go adding more to Ethereum. So let's just say 550. We're going to round it to 550. Ethereum, that's where we think they're going. All right, let's talk about, hey, Paul, welcome. All right, let's talk about S&Ps, where we think they're going. We've gone over this monthly chart of seasonality for the S&P 500, usually up 83% of the times in November, 72% of the time, 73% of the times in December. Now, when you take a look at the weekly performance, this is where things get interesting. This coming week is one of the best weeks to own stocks out of the year. The problem is for equities is that after this week, we tend to dip down or we go quiet, light volume, very, very quiet trade, thin volume. They're going to swing the market on very, very light volume. Don't get lured into bright green futures or bright red futures chasing the market in any direction. Just wait for that final half hour of trade, see where the smart money's putting the money to work at, and follow that direction. And the seasonality clearly biased towards the bulls. And if you want to know what we're going to do, Thanksgiving Day week going back 50 years, 50 years, 50 occurrences, average median return up over 3/4 of a percentage point. Best sectors, autos and parts, interesting. Travel and leisure. Interesting stuff. Worst, electricity, utilities, telecom. I'll share this out with you so that way you have it. But the bias is clearly to the upside for equities. There's one other thing I wanted to go over. That's pretty much it. All right. We need to keep an eye on this chart here. I haven't gone over it in a while, and I was honestly shocked to take a look at the yield curve, and I can't believe where we're at. And this is the federal government has changed the definition of recession. Folks, we are clearly in recession. The bond market is screaming, we are in recession. I mean, you take a look at this chart here. And for those folks that are not familiar, the yield curve, it's the spread of yields, the 2 years versus 10 years, twos versus tens, and the fact that you're getting paid more on a 2-year treasury bond than you are on a 10-year. And this is predicted every major recession except for one going back to 1955. So the yield curve is clearly falling out of bed. You don't really worry about the yield curve until such time as the yield curve begins to steepen, just as it did back here in 2020. Remember, just before COVID, we had an inverted yield curve. The market was saying something's wrong out there. Something's really, really wrong out there. And as we began to steepen, that's when stocks fell out of bed. And you could see the steepening yield curve resulted in a stock market that sold off and sold off hard. Back here, same deal. Steepening yield curve, 2000 dot-com bubble. Here, steepening yield curve, financial crisis. So buckle up, folks. This is not going to bode well for 2023. Between now and the end of the year, we only have FOMC minutes this week, durable goods this week. We have one more Fed meeting, a jobs report. Other than that, the year is done. The books are closed. So I suspect that, again, we're going to trade with a bias to the upside. Will it be choppy? Probably, yes. But as we go into 2023, I get very, very concerned about this market. And some of the catalysts that are out there are, when you take a look at the leadership groups, the technology sector, without easy money, the tech sector faces really, really hard times. I don't have enough time to go over all this, but the easy money allowed these companies to uh, borrow. If they weren't making money, they just borrowed cheap and they rolled over their debt. But without the ability to roll over their debt, a lot of these companies are going belly up. There are going to be a lot of opportunities for these companies to get bought out, but probably bankruptcy fire sale prices. Last week, you had Fed governors out there. I think Lyle Brainerd was out there. She was fairly dovish, but these others, Bostic, must keep rates at a peak. They're jawboning. Bullard, rates could rise to 7%. Waller, Fed, long way to go on rates. Daily, pauses off the table, cash carry. He was the dove, not seeing evidence of underlying demand cooling. Collins, 75 bips, still on the table. No clear evidence that inflation is coming down, even with CPI coming in. Putting together what we saw, the terminal Fed funds rate. All right, so what's the terminal Fed funds rate? The terminal rate is the level at which the Fed is expected to stop raising interest rates. With Wednesday's hike, the Fed funds rate target is now 3.75 to 4%. Folks, the 10-year yield is below that mark. Expected to surge this week, erasing all the post-CPI report. Remember, we had the rally the week before last because we had a CPI, which I warned about this. It came in 2 basis points below expectations, and yes, lower than the year prior, but still very, very hot. And I warned, this is a sucker punch. The media is trying to spin this ridiculously, and don't get overly excited. Inflation is still hot. And sure enough, the expectations, which had completely inverted post CPI, where you expected to see rate cuts going into 2023, that is all off the table now. So these are major concerns that I have going into 2023. The Federal Reserve is going to continue to jawbone this market. And if they continue to follow through with 75 basis point rate hikes, the market's going to have to crack at some point. And you might think that we've already cracked. We have not cracked. What else is going to help drive these markets? Did you know that in 2019, Amazon had around 800,000 employees? Remember, COVID hit at the beginning of 2020. At current, or I should say at the end of 2021, Their employees doubled over the 2 years. Just like the stock market is going to need to retrace the COVID pump and dump, their number of employee headcount is going to need to come back down and level off with 2019. They're going to robotics. It may even come down lower than 2019 if they continue on with their robotics, which it appears that they're going to do. So this is only going to get worse. The layoffs that we're seeing at Amazon and across the tech space, you're seeing it Twitter, you're seeing it at Facebook, across the Silicon Valley, seeing mass layoffs. So the markets are going to have to contend with this. We're going to skip this, and we're also going to have to deal with this problem here. And I don't know what else to call it, but a problem. The markets price in indecision. And I've warned about this for a couple of years now that they were going to come out with the Fed coin, and they're going to try to go to a cashless society, and it's going to be sold to us as good for the consumer because we have 5 million people that aren't a part of the banking system. It's like not even 1% of the population. Uh, they're going to sell it as they're going to get rid of drug deals because cash will no longer be around. Well, they'll use crypto. They'll use that as a reason to get rid of crypto. Uh, but in reality, this is all about control. We are you have the World Economic Forum over in Davos. They have an agenda. They hate the Chinese because the Chinese are nationalists. However, they love the Chinese model of surveillance and control. So that is what they strive for. They will do anything to get that type of control. And as I've said in the past, what we're looking at here is a type of control that I don't know why people are going to want to work. Health. You didn't take your booster. Sorry, you're not allowed in public spaces. Energy. You've used your energy allotment this month. Sorry, your electric car won't work. Food. You ate too much this week. Sorry, your money is only good for plants or bugs. Savings. If you don't take your rations soon, sorry, your money will expire by the end of the month. What does this do to the investment community? Where does this leave us? If I have to worry that our money is going to expire, what does that mean for investors? These are all questions we don't have any answers to. Free speech. Sorry, you shared info that we disagree with. Sorry, your algorithms is finding you. PayPal has already started doing this, and they have. And you may think that they took that off of their terms of service. It's back. It's back, unless they've taken it off again. If the CBDC ultimately becomes CBDC, central bank digital currency, ultimately becomes the new monetary system, its core function features will make it so that world governments will no longer need something like a global health crisis to print money or to close society. End of statement. If there's anything now that keeps me up at night, it's this. It is this. There's nothing that comes close. COVID, I thought was a grift from day one. This is I just don't know how to what this is. It's the end of the American dream. And I don't know how the markets are going to respond. Where will money go to? Will it go into gold? Probably. Probably. That's why we own so much gold. That's why we own so many gold mining stocks. But is our money safe in the gold mining stocks? We don't know. Am I going to get an email saying, hey, you got to liquidate and you got to spend that money so that way we don't need to cut rates to negative? Who is giving the Federal Reserve this power? I know there's a an executive order for Biden to empower them, but to have this kind of power, you're gonna need to have Congress get involved. And the fight that we're gonna see over the next couple of years, both in Congress and in the courts, is going to be unprecedented. We haven't seen anything yet. We have seen nothing. Freedom is on the line with this new Fed coin. So I've gone over this chart over and over and over again, and there are only a few knowns that we have out there, right? One is that we have corruption at the government level here in the United States. It doesn't matter, Republican, Democrats, both sides. The corruption is they don't fear the voter anymore. That's gone. That's gone. They are beholden to the World Economic Forum. They love the Chinese communist model of controlling society, and we are uh, slowly but surely losing our status. The G20 is going away as being the dominant body of countries that tells the world how it's going to be, and they're going to the BRIC model. And more countries are joining the BRIC model. Two-thirds of the world's populations are in BRIC nations, and they are the manufacturers. They are the commodity developers. They will control the reins of this world going into this new millennia, which we're really only just beginning. So we know that control is being lost by the West. They're going to hold on for dear life. Tyranny will follow. They have a fixation with war and trying to maintain control with war. And we know that we have a yield curve which is screaming, there's something broken, and it's it's going to get resolved, but the resolution is going to be dramatic, dramatic, and it's probably gonna make the great financial crisis look like a Sunday walk in the park. So, what's the game plan here? Well, we're gonna be watching, for the yield curve to stop going down. That's when I really get nervous because we know that whenever we wanna buy something, we always look for it to stop going down, and we prepare. We watch for the trend. We look for basing, consolidation, a rally, a pullback, higher low, and then a rally up higher. Have we seen that before on the yield curve? Yeah, we've seen it before. Back here, bottomed out, rally back, higher low, off to the races, great financial crisis. So this is what we're looking for. We're I'm gonna I don't see, unless of course there's a geopolitical event that occurs between now and January 1. I don't see an event knocking this market further down. I think that they're going to keep it in check. After the first of the year, all bets are off because you're looking at the S&P 500. This is a very simple chart. You're looking at the I'll explain to you why I have these diagonal lines on here, vertical lines on here. Sorry, vertical lines on here in a moment. Uh, Here is the S&P 500 monthly chart. We are three-quarters of the way towards the upper band of resistance. Now, to me, this looks like a fairly bullish chart. It looks like a continuation breakout pattern on the S&P 500. If we break out here and we close above, let's say, 4,100, 4,200 on the S&P 500, well, I got to rethink my doom and gloomism. But we're not there yet. All we know as fact is that we have a yield curve which is at historically inverted levels. We know that the Federal Reserve is hiking rates. We know that we have inflation that's rampant, despite the fact that it came 2 basis points below what they expected, and they rallied the market like nobody's business did they rally the market. And we know that we remain in a downtrend. If we take out, and I want to point out that one of my favorite indicators are the stochastics. This is a momentum indicator. A lot of people use it for overbought, oversold, selling. It's really not the purpose of it. It's not the purpose. It's a momentum indicator. And when you have both the fast line and the slow line declining and down below 50, rallies tend to fade. I say this over and over and over because it just repeats itself constantly. I've seen this for over 20 years now. So look at where we were back in July of 2008. The fast line in black had just crossed down below the quote unquote oversold level on the stochastic. Look at where we were in terms of price. We were down from the highs, let's say 22%. Where are we right now from the highs? Just about 20.5%. So pretty goddamn consistent, right? Here's where we're at now. Stokes are about the same area as where we were in, it said July, right? July, yeah, 2008. But look at when the real damage occurred in the market. It's when the Stokes went down below quote unquote oversold levels. That's why I don't like that terminology. The real damage occurred because the markets were so weak. This is just a measure of the strength of the market. It's nothing else. This is not an indicator that tells you, okay, I can buy stocks now. It just tells you really when to avoid or when to stay long of equities. And it was screaming back then, July of 2020, don't buy stock. Don't buy stocks. This has more damage to go. And here we are at current. Is this a repeat of 2008? I don't we know from history you have trading systems that are built on this, whether it be Elliott wave or other. History may not repeat itself, but it tends to rhyme in terms of stock market sell-offs, corrections, and bull markets. The markets are cyclical, and unfortunately, I think that 2023 is going to make 2022 look like a cakewalk in terms of performance. So buckle up if you're not currently a member. Figure out how we're going to trade it because or join us to learn how we're going to trade it because we will be building short positions in the S&P 500 and in the triple Qs into 2023. Let's do some chart requests. Or just go to comments. Jody, we'll go to other developing countries that don't have these rules. You know, countries like countries that have adopted them, they don't always keep them. I think it's Nigeria that had the central bank digital currency did away with it. I'm curious as to how the SEC and the Visa, MasterCard are in bed over Bitcoin. All the while, crypto meltdown takes place. Credit cards. Well, I think that a lot of the U.S. banks were late to the game with crypto. They're going to use it. They're going to beat crypto up like nobody's business, and they are going to get in on crypto in a very, very big way. The next run up is not going to be run by the offshore Bohemian-based uh, uh, brokerages, exchanges. It's going to be Wells Fargo. It's going to be J.P. Morgan. Those guys they're going to get in. Yes, smash the like button, please. Thank you very much, Yoga Mac. There's a lot of people in Brazil protesting. Yeah, and our media crickets. They haven't stopped protesting since the election day. Millions upon millions of people in the streets. 2A started. Please turn in your firearms. Yeah, right, right. Uh, the December SPY open interest concentration is between 395, 400. If SPY closes above 400, it'll be bullish. Most likely, yes, it would be. Yeah, Meta. We spoke about that on Thursday. We'll go over those charts. I think Meta closed up strong on Friday. No. Happy Thanksgiving to you, Tom. Thank you. All right, we have 10 minutes to go. All right, let me make a list here. We're going to go over Meta. Folks, we're going to be using TrendSpider, 35% discount code below. Help support them. They're a really good company. And by supporting them, you support me. So thank you. CM CSA. That's a long one. Boyle for the lovely Jody. Geo. EE. Okay. Dane. Okay. TA. BA. Okay. Oh, an APA. APA. Okay. Let's do it. Again, folks, we're going to be using our friends over at TrendSpider, 35% discount code, link below, automated technical analysis. Meta. I know I went over this on Thursday night. I was bullish on the chart of Meta. Can't stand the company. But stock looked good. Let's see if I was right. They tried to break it out on Friday, but no cigar. Let's take a look at how we closed out the week. On a weekly time frame, folks, this is unchanged from Thursday night. So I'm still bullish on Meta. Yoga Mac, I think what's going to happen here is that we're probably going to retrace back down to 108.08. I'd be a buyer there. Either buyer of the equities or sell out of the money puts or at the money puts if you want the shares. Get them at a discount. I think that's the play here. So that's Meta. CMCSA. Oh, Comcast. Keep in mind, media does not do well this week. Remember, going back to that chart I showed, media, one of the worst sectors during Thanksgiving Day week. So Comcast has already had a nice run here. This is a weekly chart. We did see some topping action last week. At the 20-period moving average, this is a weekly 20-period moving average in yellow. I think ultimately this gets resolved to the upside, 37.71 daily view. Just keep in mind, again, this is the power of TrendSpider, folks. I haven't looked at this chart ever, I don't think. Take them off, put them back on. You got resistance immediately above on Comcast at around 35. This is rising, so 35.40. We hit it last week and we were rejected. So if you could imagine buying here on the breakout above this automated trend line, you got the alert, you were watching, you bought the breakout, you enjoyed this ride higher, you knew there was resistance immediately above, you set your alert, letting you know, okay, let me know when it hits that, and you were out at the top, or you had a trailing stop loss order in place. That's the power of the automated trend lines. Folks, have it in your toolbox. I go through so many charts like this. 35% discount code below. Boyle. So long story short here, I think you have some backing and filling to do. I think it's going up higher, but you're going to have to work off some of the overhead supply that's immediately above. Boyle. Down in the opening session, about a half percentage point. On the week, though, last week, a good showing. I mean, the week prior to last, Boyle had a horrible, horrible outside reversal bar. But last week we popped back and we closed above support. Good stuff. We have weekly RSI rising. No higher high yet, but close. Stokes beginning to rise. Daily view. Daily view, we saw a breakout on Friday above that automated trend line. So Boyle looks like it's a buy. You may get a retrace because remember that we are in the pre-market selling off a bit. Coming back slightly. So, you may wanna buy the dip tomorrow. Expect a pullback tomorrow morning. Uh, Geo. Geo Group. It broke out last week. The weekly chart is very, very good. I would not buy this stock, though, because I already took a sneak peek at the daily chart, and the daily chart is telling me, "Don't buy this stock." When do you buy it? You buy it right here. On a retrace. It may take a week or 2 to get there. The reason why I say don't buy it now, take a look at your daily chart. What did it do on Friday? It gapped again up and into this resistance level. Each time, again, this is the automated trend line. I didn't draw this line. That's the algorithm telling you, don't buy it here because every time we tap this upper band of resistance, back here, here, we didn't even make it up this time. Here, here, we're gonna get a retrace. Allow it to retrace back down to support $9.30. Geo looks good. It is going up higher longer term. EE, 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 daily chart. Let's go to the weekly chart first. Daily chart looks good. Not a lot of data here. Weekly chart looks really, really good. You have a higher low. There you go. Here's your pivot point of this W formation right here at 28.73. So they are inching this up. I'd be if you wanted to nibble here, I don't have a problem with it. I really don't. Uh, but I wouldn't get aggressive until no sensitivity. All I care about before getting aggressively long of EE, close above. I'll give you the number in a moment. No, I don't want any of this. Yes, there we go. EE weekly. There we go. Now on a daily chart, it broke out on Friday. So a little bit of a topping tail. If you can get in on this, oh, I didn't give you the price target. Um, right now at current, it's at around 28.24, $28.24. So a little bit of a fade on the day. So you had some profit taking on Friday. Look for a retrace back down to around $27.12. I'd be looking to build a position, certainly not a short. The path of least resistance is higher on EE. OKTA. Oh, we went over this the other day. I was wondering why this looked familiar. It's just consolidating here. Not much happening. Rejection at 52.88. I think it was above it on Thursday. No, it was not. It was below it still. Uh, you gotta wait for strength. You know, the daily chart, you have the potential for a higher low here. If you wanted to buy here, you're gonna use a tight stop, stay small, 20% of your intended allotment, but then add more on a breakout above 55.19 per share. That would be a completion of this W formation. That's where your pivot point is. $55. What's the high here? High 55.43. What else do we have? Boeing. Was on a tear. Weekly chart. We're at resistance. You need to avoid Boeing right now, unless, of course, we break out. You have resistance immediately above last week's highs. That's why it backed off. Daily chart. I think this is a bull flag setup. Yeah, it is because we already broke out of it. Here's your bull flag setup. We broke out on Friday. I'd be a buyer of the shares at a close above 178 per share. Boeing looking good. And if you take a look at the weekly chart, you have the mother of all W formations that is formed here on Boeing, and we are above the pivot point. 2023 is probably going to be a very, very good year for Boeing longs. Oh, shit. Mm. APA, Apache. Energy stocks broke down last week a bit. We're seeing some weakness there. I still like the chart of Apache. However, if oil continues to weaken up as it did last week, you're going to have a problem with Apache being able to break out. So uh, it looks like we're consolidating. I don't see a compelling reason to go buying here until such time as oil prices firm up, XLE firms up. XLE did not look good last week at all. Daily view. The daily chart here of Apache looks good. It looks good. I want to say get long, but I'm worried about the parent group, and the whole sector is looking pretty weak. I'll show you what I mean. Excuse me. Not horrible, actually. We bounced back on Friday, but we did break down below a support level last week. Warning flag on the track. That's all I'm saying with energy. Excuse me. All right, folks. Everybody have an awesome, awesome. Thank you very much. Happy Thanksgiving to everybody out there as well. Happy Thanksgiving. Thank you very much. Yeah, right. Uh, I need to watch it. I need to watch it, and I will. Nugget. We'll leave it off with Nugget for Talon. Nugget, I'm bullish on. It bounced off of its VWAP. Yeah, I just worry about the dollar. Obviously, Talon, you know me very, very well. If the dollar continues to show strength, which is not at current, that means trouble for Nugget. If the dollar weakens up, that means Nugget's moving up higher. Simple as that. So nice close on Friday. It held the VWAP, which is connecting prior lows. Weekly chart. The down week, but it closed off the lows of the week. So I'm still bullish on gold mining stocks. Jody, happy Thanksgiving to you as well. Thank you. TZ Burton, have a great night. Thank you for being here. Paul, happy Thanksgiving to you as well. Happy Thanksgiving to everyone. Thank you very, very much for being here. My honor and privilege to go over these charts with you. Thanks for your time. And everybody have a really, really great Thanksgiving holiday. Rest up, enjoy, get ready for 2023. It's going to be a busy one. Talk to you soon. Be well.